Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Tuesday, the 30th of June. Starting off with a stock for the Alpha Growth Barmy Army, who keep asking me to look at this chart. It looks like as though it might actually finally be ready to move out and move up in a decent way. We've got a line of resistance there from December. That's currently around the 1.95 area, something like that. End of day close above that. Could take the shares up towards the top of this rising trend channel that I've drawn from February, as high as 3 pence, obviously just retesting the December resistance area. The other pluses which make me think that this could finally be it without any prevarication is the way that all the near-term moving averages, the 20, 50 and the 200 are rising. We're just about a day away from the 20 and the 200 crossing in a golden cross, and probably a week away from a golden cross between the 50 and 200 day moving averages. And as I say here quite constantly, the run up to a 50 to 200 day moving average crossover, golden crossover, is normally the sweetest spot in the technical cycle. This stage only really back below the 200 day line at 1.65 would really delay the upside scenario. Stop loss back below the floor of this rising February channel around the 1.55 pence level for those who do that kind of money management. Next up, a stock which is looking quite sprightly, Cambridge Cognition, has had the look of a rising or recovering stock for quite a while. Current situation here, we're looking at probably a move towards 80 pence, which would be the top of that rising trend channel from this time last year. Floor of the channel currently running level with the 50 and 200 day moving averages. End of last week we saw a golden cross between the 50 and 200 day moving averages. Neckline resistance broken around 35 pence, so above 35 pence, looking for 80 pence at the moment, and probably over that would happen over the next month to 6 weeks given the current rate of ascent. New CEO at Dukemont Capital, which is an excuse to have a look at the shares. Interesting here in terms of looking at the detail of the stock. We've got the 200-day moving average rising, and in fact, looking closely, it was effectively a golden cross, near to a golden cross between the 50 and 200-day moving averages there. But whether it was or not, we've had multiple support points there for the shares around 0.6 pence, so clearly somebody dipping into their pockets around that zone. And a while above 0.6 pence, looking for a top of October rising trend channel target as high as 1.4 pence. If we're cautious on the situation, probably just an end of day close above 0.8 would be enough to trigger a move towards 1.4. And if you're a real fan of the stock, above 1.4, you've got a potential target there, hitting that resistance line from July last year as high as 3 pence. But obviously at the moment that's a long way away. Currently we're just looking for 1.4 while we're above 0.6 pence. Next situation is one which I don't think I've looked at here before, Landor Resources. Reasonably, I mean, it's not an outstanding chart, but a reasonable situation here. Bounced off the 200-day moving average at 0.7 pence last week or the beginning of this week. And while we hold above that, looking for 1.4 pence, a bit like Dukemont really, 1.4 pence at the top of a rising trend channel from November. That could be hit over the next 1 to 2 months, and it's been accompanied by, in the recent past, a decent spike in volume. And you can see that spikes in volume there have in recent months been good forerunners of fresh moves to the upside. So let's see how that goes. MVR is next. We're in a virtual reality paradise at the moment, apparently, with the COVID situation. And nice moves here on the daily chart. Looks like we've got an uptrend line there from March running at 3.93 pence, which is the 20-day moving average level. And while we're above that, looking for 7 pence over the next so I suppose 1 to 2 months for the shares. End of day close above the 200-day moving average at 4.75 pence would hopefully seal the deal in terms of being the trigger for a move to the upside on Melody VR. Mining stock is next, Orosur Minerals, and here Beautiful V-shaped bull flag bouncing off the 50-day rising 50-day moving average as well. We had that gap higher at the beginning of May, and that was really the start of the climb for this stock. So looking quite encouraging indeed. For terms of what the upside could be, I'm expecting hopefully up to 6 pence plus, which is the top of a rising trend channel from January, and that's really been triggered by the break of that resistance line there from August last year around the, I suppose that's 3.5 pence. So basically, essentially, especially while we're above 3.5, looking for 6 to 6.5. Only back below the 200-day moving average area at 3 now, really delaying the upside scenario there. Next up, we have Prairie Mining with a very sharp move through or above the 200-day moving average here at 10 pence, and also breaking the initial June resistance. End of day close above the initial 2020 resistance at 12 pence should be enough to give us a move up to the top of a broadening triangle from June last year as high as 25 pence, and hopefully much more. This looks like quite a decent momentum situation, again fired by good volume a week or two ago on the stock. I suppose if there's a award for chatter on Twitter at the moment, we go to Physiomix, where you can see that yesterday we had a bounce off the 50-day moving average at 4.6 pence. Also an uptrend line from the end of March there at 4.6 pence as well. And while we hold above the 50-day line, looking for 12 pence as a best case scenario. If you're cautious on the stock, maybe wait for an end of day close above today's current intraday high of 5.9 pence before pressing the buy button. Good situation in terms of the setup we're seeing currently at RedX Pharma. A nice break to the upside there. We had a massive gap through the the 50 and 200-day moving averages. Bear trap gap reversal, in fact, in March, and the shares have basically been in a positive consolidation ever since. As far as what the upside could be here, I'm looking for quite a big figure here, which would be the upper parallel of that early 2020 support line, so heading towards 45 pence over the next month or 2 months, while we hold above 15 pence, or at least the 50-day moving average area currently around that particular level. TrackMate is a stock which has had a rather checkered history, I presume, from a fundamental perspective, but from a technical one, looks like there may be a recovery opportunity here. We've broken that line from January and the 50-day moving average at 14 pence, and at least while we're above the March support line at 13 pence, we're looking for a top of December price channel target, 12 pence. We're looking for a top of December price channel target as high as 30 pence over the next 1 to 2 months. Finishing off with a stock which has delivered news today, Verditech. Here you can see that, I've actually been looking at this since, especially since the beginning of the month, with the break of the 4 pence level. We peaked at 10 pence last week, but looks as though the shares are ready for a fresh leg to the upside, at least while we're above 6p. The destination here could be as high as the top of the January trend channel at 14 to 15 pence. There's also a line of resistance as a best case scenario from the end of 2017 heading towards that 15-16 pence area as well. So looking fairly well placed in terms of the technicals there for Verditech, especially if we can have a decent weekly close above last year's intraday peak around that 10 pence level. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.